welcome. This is the Market Wrap. I am Agam Vakil. Well, as far as the benchmark indices are concerned, we're looking at extension of losses, though not too deep. But when it comes to the Nifty, taking a cut of as much as 38 points. But while the Nifty has declined by just 38 points, there are plenty of stocks out there which have seen some very sharp moves. So let's start with the big index movers. In terms of gainers, we have Sun Pharma, which has moved up 4% specifically towards the end of the session, and more gains coming in. Bharti Infratel, NTPC, and Tata Steel. However, on the losing end, we're looking at further losses on HCL Technologies, and I am going to address some of the problems with this particular counter. We have more weakness in UPL and Eicher Motors, and in general, because of the fact that Wipro along with Tech Mahindra and Infosys show up, the IT pack is the reason why we're looking at weakness as far as the benchmark indices go. In the broader markets too, there have been several sharp moves, and in terms of advanced decline ratio, there's been one gainer as compared to two losers, and HCC along with Jet Airways and Interglobe Aviation, DCM Shriram continuing to fall, and we have more weakness in Reliance Communications and Just Dial as well. On the gaining end, we're looking at a little bit of reversal among counters which have been extremely weak in the last 1 week, and Quality moves up by as much as nearly 10%. PC Jewelers also looking at a little bit of a U-turn, up as much as nearly 10%. MMTC and Edelweiss Financial advancing. Of course, Edelweiss Financial advancing on earnings. So on the whole, the advanced decline ratio remains a little bit of a concern. But to get a little bit of more perspective, and I'm sure you, Neeraj, will address the advanced decline ratio. We have, of course, Neeraj Shah joining us to give us a little more perspective. What are you reading now, Neeraj?
Hey, Agam, I mean, just helped that the last 1.5 hours was on the anchoring stool and could figure out what's happening. But yeah, I think you put that into 2 days in a row now. Starting the last 1 hour of trade yesterday and today, right. The market has been terrible. The market that smacks of an index which is down about 1.5%. Just that we haven't had the headline numbers move down too much. Nifty Bank has been holding out very well and has been kind of been able to absorb the pressure that maybe the IT names and some of the others are generating. So that is part one. Part two would be the broader market breadth and more so in the liquid universe. Yeah. It'll be interesting to see for how long do these cuts in specific names, Repco Home, Century, etc. last, because you would attribute some of these to the SEBI circular changes as well. Right. Now, once these moves are exhausted, you don't know whether that pace of deceleration in some of these stocks would continue, because we didn't have too many news in Repco or the Century Textiles numbers was not so bad that you will punish the stock about 18% in 2 trading sessions. So. Right. Remains to be seen what happens there. The headline indices are holding out for now, but as we approach May 12th and then May 15th, right, you would expect nervousness to creep in, and maybe that could kind of weigh in on the markets. Remember, we are at heady levels, so right, nervousness would probably cause the markets to correct a bit.
Absolutely. Neeraj, thanks for joining us.
Thanks.
As Neeraj put it, we are at heady levels, and as we move in towards the end of the earnings session, a lot could change as far as the markets are concerned. That said, what are the technicals telling us about the charts? Let's listen into Sarvendra Srivastav about the levels that we can keep an eye on as far as the Nifty is concerned. Here's what he has to say.
I'll say this divergence between the mid-cap index and the bank Nifty vis-a-vis the Nifty does not augur well in the short term. So eventually there will be a little correction. So I would stick to my 10,400 target that we gave last week, and I would assume that that is where probably then market should decline in a slightly short term. So 10,400 on the downside is what I would recommend on Nifty.
There you have it. Those are some of the levels you can keep an eye on. But there were, of course, plenty of pockets in the markets which were also buzzing in trade, and there was substantial weakness in the aviation sector. We have Soumit Sarkar joining us to tell us about the weakness behind Interglobe Aviation, and of course Jet Airways also dipped today.
It was actually all the 3 aviation stocks that declined today in trade, and we have seen weakness in the aviation stocks post Indigo came out with a weak set of numbers in the 4th quarter of financial year 2018. Now the numbers were weak on the back of falling yields, higher fuel prices, and because of the foreign exchange loss that the company reported in the 4th quarter of financial year 2018. Now in the conference call, the management clearly said that the yields fell because of the weak pricing environment in the industry, and the company said that the competitors were offering more discounts to attract customers, which made Indigo Indigo to reduce its fare prices, which led to a fall in yield. Now this is important because of the fact that the fuel prices were higher in the quarter, so it was a double whammy for the company, with higher fares or with fares falling and with fuel prices rising. So now there's a possibility that SpiceJet and Jet Airways might also report weak numbers, given the fact that Indigo, which is best placed among the other aviation stocks when it comes to cost, has seen such a sharp fall in its net profit. So despite good passenger growth during the quarter, there's a possibility that the other two aviation stocks, that is Jet Airways and SpiceJet, might report weak numbers in the fourth quarter of financial year 2018.
Thanks, Amit, for bringing us those details. Of course, to take you through quickly the way aviation stocks have panned, we've seen 12% cuts on Jet Airways, 10% cut in Indoglobe Aviation, and SpiceJet down by as much as 6%. But there was yet another stock in the mid-cap space which took quite a hit, and that is HCC. We have Nikki Mirchandani joining us to tell us about the reasons. Nikki.
Hi Agam, it's actually the worst fall that we saw for HCC ever since the listing. This is after Lavasa Corporation, which is a subsidiary, reported their numbers, and in the numbers lied the devil. There in the audit report, there were concerns which were flagged off by the auditors. The company's subsidiary Lavasa is considering a resolution plan for its outstanding debt. It's supposed to pay 220 odd crore for the amount which is outstanding as of June 30, 2017. Agam, 4-5 concerns that the auditors have pointed out in the report. One being that the company has incurred losses to the tune of 682 crore. That is almost a threefold jump than the previous financial year. Current liabilities have exceeded the current assets by as much as 2,300 crore. It says that the company has defaulted payments to its debt holders, debt holders, along with the financial institution banks. The lenders have invoked SDR, and this would have a material concern, will have a material bearing on the company as its ongoing concern basis, which means that it is a kind of insolvency, sounding caution. Also, back in March 2018, DNA had said that Lavasa is probably going to be going ahead to NCLT and challenging the kind of the challenges it is facing in terms of raising funds. Right. On back of it, the stock corrected 14%. Management gave a clarification that this doesn't hold true. But then again, we have the reports flashing, which almost confirms the story that DNA broke probably in March.
Well, thanks for that, Nikki. Of course, we continue to keep track on HCC. But the final stock that we want to address in today's day of trade is the substantial weakness that we've seen in HCL Technologies. And the real concerns here are with respect to the organic growth of the company, as the company has guided for a 4.2 to 6.2% growth in constant currency terms. That means that the balance 5% will have to come from its acquisitions, and that is something the markets are skeptical about, whether or not the company's acquisitions, the ones it's made in the past as well as the ones it will make, can drive that growth going forward. That said, there are plenty of concerns with respect to its infrastructure of services as well, in that particular segment where the company has suggested that it's bottomed out, but analysts beg to differ. And finally, when it comes to Mo2 and Mo3 services, while we have seen robust year-on-year growth, the question really is, can it come in aid of HCL Technologies? For now, it seems unlikely because of, and as per the indications of the Nifty, of course, as well as the way the stock has panned out. But with that, it's a wrap on this edition of the Market Wrap. Don't go anywhere, lots more lined up, so stay tuned in a Bloomberg.